Welcome to the 10 Mil Club Standard Portfolio Meeting for the third week of May, going into the fourth week of May, 2026.
From Nashville.
It's the 10 Mil Club. It's the 10 Mil Club.
Nothing we say in our videos is financial advice. Don't trade strictly on anything that we say. Our ownership or interest in any stock or security that we discuss could change at any point in time. We may own it and we may not. Securities we present may or may not be suitable for you. You'll have your own ability to and willingness to bear risk, and any valuations we present in our videos are not reliable and will not conform to the standards and ethics of any of the valuation organizations to which I am beholden. What is the 10 Mil Club? The 10 Mil Club is an informal group of people that believe that if we could get to $10 million of net wealth, we would have the financial security and freedom that we desire. We sure would appreciate it if you would like our video, if you would subscribe to our channel. At this point, the more people we have listening to our message, the more fun it'll be, and we always appreciate you leaving us a message, a comment, suggesting a stock, anything. So let's get down to some standard market stuff. The put-call ratio this week is at about 0.342. Now, the put-call ratio is generally viewed as a contrarian indicator. If we're at 34% puts to calls, that's a relatively high call ratio, which is kind of viewed as a bit of a stronger. You would think that it would be an upside indicator, but actually it's a bit kind of on the overbought side. And you can see the volume here, which is a bit concerning. The percent of Standard & Poor's 500 companies that are above their 200-day moving average spiked this week to about 56%. Our concern is that we seem to be kind of headed in the wrong direction. We're below the 200-day moving average on that, if that means anything at all. The percent of S&P 500 companies trading above their 50-day moving average also spiked. We just simply had a week where breadth picked up a little bit, but you can still see the downtrend in the percent of S&P 500 companies. The S&P 500 itself, the proxy for that we like to follow here is SPYM. The only reason we like to follow that is because it's a share price that kind of appeals to us, $87.75 a share, and it is up. It crossed this trend line that I drew right there, but we're keeping an eye on it right up in this little area. There's just some stuff going on underneath the market that just doesn't feel good. We've been stopped out of a bunch of stuff. You'll see we did very little this week in our portfolio here. Lots of discussion, lots of standoffishness, lots of concern, but we really didn't trade a whole lot. Now, we have a lot of things we want to discuss, but there was just a lot of being really careful. The VIX is actually still kind of low, 1670, which is below the magical 20 mark, which should indicate a placid market with upward momentum, and there's some to be had. The MOVE index here is the kind of the VIX for bonds. It took a spike about a week ago and then has let off a bit. So by volatility, the market is really kind of showing a fairly placid, easygoing, what should be an upwardly mobile sort of situation. There's just some stuff bubbling under the surface that we don't particularly like. Now, that doesn't mean we're not going to end up buying some things and trying some things, because if this is the situation, we're going to need to try to make money off of it. So with that, let's get to it.
It's the 10 Mil Club.
We're still watching Adaptive Biotech, ADPT. it's forming, if we go to 6 months, 1 day here, it's touching this line. It touched it here a couple of times this past week, and we just didn't have the attention span apparently to buy it. It should eventually touch that again, and we could pick it up. We might even be able to trade it fairly short term. But if we're looking at a year of it, it has that 1 year uptrend. Sorry about all the lines on this. That's a lot of lines. But this salmon overlay is some code that we picked up and put, all of us in the 10 mil club, put it on our SPYM, which is the format, the software that we use, structure we use. And so that salmon overlay is on everything that I show here. The red is me drawing a regression channel. So as you can see, ADPT actually had more upward momentum back when I drew the regression channel than it does now with the salmon overlay. But it appears to be catching a footing right down here in this area. Now, the way my luck has a tendency to go, I'll end up buying it, and that'll be the day that it decides that the bottom's going to drop out of it. I hate to sound negative, but that does seem to be the way a lot of things go. I'll see something do this right here where it touch. I'll think, okay, and I'll pick it up right there at that line, and the next thing I know, it's taking the next leg down. I will also say, human beings are wired to remember negative events a lot more clearly. They say about 2/3 better than positive events. So, and right now is actually kind of a tough time to trade the market. So we're going to be a little bit cautious in what we do. API group, APG is one that we kind of picked up this week to start watching. It has a pretty nice scan to it. This is if you're looking at a year 1 day, this is a 3-for-2 split back here a little under a year ago, but it's come down and is once again respecting its 200-day moving average. Just to let you know, one of the things we've started really watching for is trying to stay over the 200-day moving average and pay attention to what a stock does with its 50-day moving average. So this one kind of has a good feel to it. We'll be watching this week. Atmos Energy is new on our watch list. ATO respected its 200-day moving average, stopped right there. It is below its 50-day moving average. That's not the biggest of concerns to us. If we get a turn right here, we could get some pretty good lift out of ATO. CarGurus, CARG, this is one we got stopped out of, I believe, losing just a few dollars at most. We're looking at this turn right here. It's not like their earnings were awful. They really weren't. I mean, okay, so they weren't what the market wanted, and I can kind of see some flaws in it. If you go and you read this news, you can see it. But CarGurus, we are looking into, we're waiting for a turn right down here. CMC, we still own commercial metals and are up 5.04%, which I will take in the current market. And we're holding on to it. It gave us a scare early this past week and then seemed to find its footing and kind of come right on back. And with that, we held right on to it, and so far we're doing okay. So we're going to hang on to CMC for right now. Coinbase, new in the watch list. Coinbase, as you can see, has a 1-year downtrend, but it's kind of start establishing a 1-year uptrend. It has a lot of volatility. Now, if you watch Dave Keller on market misbehavior as I do, which I do daily religiously, this was a bad week for me because I believe Dave was at his daughter's graduation and it was tough trying to live life without Dave Keller. Dave's pointed out a couple of times that Coinbase actually acts as like a a leveraged play on Bitcoin. It shouldn't, because it's not the same thing as Bitcoin. It's in that space. Certainly, it's part of the trading system of the blockchain for sure. But Coinbase acts as almost a leveraged play on Bitcoin, and we keep a Bitcoin ETF here so that we can watch it. But Coinbase actually entered our watch list this week, and so we are going to be paying attention to that to see if a pickup somewhere in this spot is a good thing. Dover, DOV, is new also because this is its 200-day moving average, and it still has the uptrend in place for a year. There we are. And it has a pretty good looking scan. EXPD, we're not sure what to do with this one. EXPD has the upward momentum. It had earnings that probably shook some people out, but it respected the 200-day moving average, came right back and started moving up. We may find an entry point and buy it in order to capitalize on the next upward move, or at least continued upward movement. We will see, but that is one of the things that we're going to be looking at this week. Got stopped out a week ago on Freeport-McMoRan. FCX, let me zoom in just a little bit on it. I'm going to go 3 months, 1 day. We bought it, and the very next day we're stopped out. Came down, and now we've established this uptrend again. Now, one of the technical indicators that we've been looking at is, I think they call it the 3 white nights, which is 3 up days, and it helps if they're fairly large up days, and it also helps if the stock is, if the upward movement is accompanied by stronger volume. We don't have the stronger volume. We don't have 3 up days. In fact, Friday was a down day. So there's some concern here. We don't know if we're going to be trying out Freeport-McMoRan or not, but it's on the list. Fox. We sold Fox for a profit right there. And so far that's been a great decision, and it's now back at the uptrend line. We're going to see if it respects that uptrend line, and if it does, which is right at the 200-day moving average, we will likely be buying Fox again. This may be, no, let me put it this way. This is the last week we're going to be ducking in on FUBO. Creative Ostrich 4066 and I had a bit of a tense back and forth this week on Facebook, and I'm just going to be honest, this is a bad chart. Until FUBO shows some kind of sign of life, we won't be following FUBO anymore. In fact, as you are my witness, FUBO is off the watch list. Sorry, Creative Ostrich 4066, whoever you are, but I cannot continue watching this stock destroy itself. I'm just not going to do it. So there you go. GILT, we still own Gillot Satellite. We are down 1.25% on Gillot Satellite, but if I'm looking at 6 months, we have our footing right through here. We bought it at 1593. We're at 1573. It seems to be respecting that 200-day line. Stops above the 200-day line, but as it sits, Gillot Satellite looks like something that we will continue to hold and likely will get a lift out of. HCSG, we are watching again. Don't know if you remember, but HCSG we bought going into earnings, which is not something we do a lot, but then it spiked at earnings. We sold it, and since then it's returned to the bottom of this channel. So HCSG we'll be watching this week. LMND, you have to go out to a year, 1 day of LMND to realize this is an insurance company, and their fundamental scan looks very good. Now, we are subject to the movement of the market. Technical analysis has a lot to do with how much money you make. You can scan fundamentals and price things all you want to, but the truth is, if the market doesn't recognize it, it's not worth any more money. So we're looking at this because it looks like it has a spot down here, but it is below its 200-day moving average, which is right there. So we will trade carefully on Lemonade, but we're going to be watching it this week. NextEra Energy, NEE, is new in our list. This has an uptrend, and it's above its 200-day moving average, and it's on the line, and if it consolidates right here at this line and we can find an entry point, we will be looking at NEE this week. ORI, Old Republic International, is also an insurance company and is doing the same thing, but it is below its 200-day moving average. So we'll have to see kind of how that works out. Probably a little less excited about that one. ROST stores. Okay, ROST and TJX Companies, which is the parent company of TJ Maxx. This was our big shakeout of the past couple of weeks. Walmart took a dive about that same point in time. These sold off going into earnings, and then the next thing you know, their earnings were very good. It kind of made sense that, I mean, think about it. Consumers stretched, price levels are up, job market is a no hire, no fire job market. There's a lot of negativity out there. And where are people going to go to shop for clothes? In the market where, I mean, what do they call this? I think they call this the, it's not the off-brand market, but anyway, there's a term for it. And Ross and TJX are right in the middle of that kind of market. And this is where people are going to go to shop for clothes. So there was a deal there. We actually ended up stopped out of both Ross and TJX, and now the momentum is likely to continue up. So Ross and TJX, you got us on that one. That's annoying. Really, really annoying. Okay. SH we are keeping on tap. This is the ProShares short S&P 500. The only reason we're keeping this is because if we are really concerned about what the S&P 500 is doing underneath the surface, if it starts moving the opposite direction, we want to know. Now, it crossed the line here just like the inverse of SP, where are we here? SPYM. So here's SPYM, which we follow for the S&P 500, which should look almost exactly like the opposite of SH. We are waiting for the market to just break down. Now, maybe that'll happen, maybe it won't. I don't know. But we're going to have this, and we're going to have, not TBF, sorry. We're going to have PSQ, which is the NASDAQ, or the short QQQ. We have that one on tap too. So PSQ and SH we actually have on tap for the moment that the market breaks down. I say as if we know that the market's going to break down. We don't know that, but we need to have it ready for the time being. All right, SOFI is a curiosity wrapped in an enigma. There's a lot of stuff traveling around the internet about how SOFI is probably undervalued. Now, I don't disagree. I'm a business valuer. We probably need to do a deep dive on SOFI. We have not done that yet. In truth, I don't know what the next 2 to 5 years holds, but it is true that they have a very good-looking fundamental scan. We really need to do a deep dive on SOFI. We're going to keep watching it simply because it looks like it has a lot of opportunity. All right, this was another huge disappointment of ours. SOXX, which is the semiconductor ETF, went up, 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 up. It broke. It stopped us out and then broke back out of the downtrend and went straight up and is now higher than both our acquisition price and our stop out price. Sometimes that's what happens. I'm a little concerned about getting back into it because of the way it broke and then turned. My concern is that this might be a topping pattern. It is kind of called the most crowded trade on Wall Street. if that is true, we want to be a little more careful about it. So we haven't gotten back into SOXX, but there it is. TMC, we have to cover TMC, and we'll continue to do so, if only because people come to see us at the 10 Mil Club for TMC, the metals company. And there it is. TMC, the metals company, does have an uptrend at the moment, but there's just no way to value this stock. Like we said, you know, I don't know, earnings flash here. Let's take a look at the earnings flash just for a minute. Quarter one loss narrows. So loss late Thursday of 5 cents per diluted share, narrowing from a loss of 6 cents per diluted share. So there you go. TMC, the metals company, we have not bought it yet, and I don't know if we're going to, but we watch it simply because the 10 Mil Club, people come here looking for it. Vera Bradley, VRA, is turning on this line right here. It's still above the 200-day moving average. It is below the 50-day moving average, but it's almost as if somebody simply decided to sell off a block of it, and now it's showing this turn here. We probably will pick up Vera Bradley again right here in this area. Verizon back on the watch block. For a long time, it rode the 200-day moving average. This line, I know that looks out of place. You kind of have to back up and go, all right, if we have 2 years of Verizon, there you go. So it's like this long consolidation pattern, and then all of a sudden they have this set of earnings, and bam, up they go. And then retrace to there. If we wanted to, we could probably do Fibonacci numbers on that and just see kind of how that works. Aha. So it retraced to the 50 moving average, but not past the line of no return, and then kind of came back, and it's back on this line. So watching Verizon. Walmart, WMT, the earnings came out, and honestly, to my understanding, their earnings looked okay. This is 1 month, 1 hour. Their earnings looked okay, but they made some statements about how they expected their growth to slow, and that killed the stock for a day, and then it went down again. We're watching Walmart because honestly, Because honestly, with Walmart, we would dearly love to own some. We bought some back when it was like $98 a share, and raised the stop and got stopped out all the way back here. Sorry, right here. Raised the stop, got stopped out, and boy, do we wish we still had it. But you know, such is life. Finally, YETI Holdings is our last one. YETI is starting to show some signs of life and a bit of a pullback, and we may actually buy into YETI, and that is what we think of it. Please like our video. Please consider subscribing if you came across us and you aren't. From all of us at the 10 Mil Club Production Room, Laura Sue Will and Mark Thomas in production and engineering, Sophie, Hannah, and Presley, the 10 Mil Club singers, my nieces and nephew, Wallace, Hattie, and Jimmy, and Jackson, our announcer. We will see you next time on the
10